Hi there, traders. This is Brad Gilbert with the FOMC preview. All right, now I haven't seen a meeting like this in I reckon 10 years, where there's so much anticipation. You know, the markets are hyped. It's full gangbusters. There's overshoots across the board on many instruments, and it's going to be pretty exciting. Now, I know from some of our traders, they're sort of talking about it's probably untradeable. I'd say probably in the first period it will be, right? You got the release. If I just get the page up there, you've got the interest rate announcement, right? And then you've got the press conference 30 odd minutes later. So there's two parts to this, right? It's how much have they raised interest rates by, and 0.75% increase from what I've read is 99.7% factored in. Right, so that's what we expect. 0.75. Anything less than that, the dollar comes off. Obviously, anything more than that, the dollar goes up. But if it just comes out at 0.75, the dollar's not going to do anything. There might be a small amount of buying, but that's it. It's already been done. Right. One of the old adages that used to be in the banking game was buy the rumor, sell the fact. Right. The market has bought the dollar on the rumor of higher interest rates. We know it's coming. They've actually priced it in. So if it does come out at 0.75, it's really going to come down to the statement and the press conference, what happens next, right? So what we're talking about is, you know, if they come out 0.75 and go, you know what, if it's crazy again next month, inflation, we're going to go again and again, right? That's aggressive. If they come out and say, look, we've gone 0.75, really try and get ahead of the curve. We don't expect to do that anymore. Obviously, depending on the data, blah, blah, blah. That's a bit more placid, and the market will ease back, right? The only way the dollar is going to go through the roof here is plus 0.75 or 1%, which I can't see, right? I just can't see them panicking the market like that. But if they went 0.75, excuse me, and then went, you know what, we're going to have to do this again and again and again, well, that's hugely hawkish, and the dollar would go ballistic to the top side. Once again, they don't want that. Right? Don't forget, the central bank's trying to manage the economy. They're not trying to create extra volatility. So they're very transparent in everything they do. All right, I'll come back to that in a minute, because we'll come back to the Fed side. Now, if I'm having a look here, right, you've got to prepare yourself mentally for this, right? So just looking across the board here, actually, let me just come over here to the global sort of market first. Now, just having a look, what page am I on there? Yep. Okay. Okay. So having a look here, obviously huge moves since last week's CPI. I mean, everything's been hit. Of course, the equity markets, Bitcoin. I mean, I've been saying it for quite a while now. It's just attached to the equities now. It's right, a risk on profile. Of course, risk off with the equities coming off, interest rates higher. That's playing the game perfectly, right? The dollar through the roof, euro, well, ECB let the team down. And you can see, let me just clear the screen there. See with these central bank meetings, the ECB, right, totally got me off guard. I didn't expect them to sit in the back pocket, say, we're not doing anything, everything looks terrible, blah, blah, blah. Of course, it snaps down through that support line. You'd love to have that one moment over again, because then you throw that on, especially then you get the US CPI numbers and it's all over bar the shouting. That's why we're down here. Now, gold it's coming off. Volatility's up, right? Well, the volatility index, but whether that's just a dollar move, the strength of the dollar. And one thing that you're going to expect, right? Now, I wanted to leave at least one chart here with a bit of craziness about it. You're going to expect overshoots here, right, on the announcement, and primarily because liquidity is going to disappear. Okay. Now, if you are sort of wondering, you know, what's all the hype about? Well, the Fed is the epicenter of all the financial markets, right? This is where everything emanates from. So it's like the big brother doing the plan for the rest of the world and what you can expect. So, but have a look, central bank meetings, right? They do have a massive impact, and you see things really turn around. Aussie straight down. I mean, ECB, That was ECB as well. So you've got this impact, right, across the board, especially on the equity markets. You probably even see it a little bit better, where you see central bank meetings are the turning point for the equity markets, right? So, but what the market does is it gets ahead of the curve. It gets ahead of the announcement. Buy the rumor, sell the fact. In this case, with the equity market, sell the rumor, buy the fact. And that's why these things have capitulated. And that's what you're going to expect across the board. I mean, equity markets have been on a dream run since the global financial crisis, right? Donald Trump sort of just pumped the air into the tires and just kept them going. So if you are sort of sitting there, sort of scratching your head thinking, oh, well, I've got a bit of a portfolio here, right? You look at the equity markets year to date, I'd say with what's going on in the US, these will be down, should be closer to about 70% this year, right? Because that's where interest rates are going. So you think you might have had a good run. If anything, I'd be sort of offloading anything I've got because that's where it's going. So, right. But in saying that, it's not going to be just plain sailing. It's just not going to be just straight down, right? What you're going to get is we've got 0.75% factored in, okay, into the market. So what that does, if it comes out 0.75 and they're a bit relaxed, you know what's going to happen? Equity markets are going to rally, right? They will rally because we got the expected situation or the expected outcome, and they're back in the pocket again. So that's what we've got. That's what you got to look forward to. Now, you got to prepare this extensively. Now, that aside, when you come back to the market ahead of the Fed, have a look what's going on. Now, right here in the middle, more than halfway through the Asian session, equity markets are going up. And we've got a perfect risk-on profile here for the major currency pairs, right? Metals also, gold, silver going up, and well, crude's doing its own thing. It's come off a bit, but hasn't moved too much. So that's where we are. Now, what is a little bit surprising to me is we've got this US equity futures rallying, telling me, you know what, they're a bit overshot. We've got the dollar block, euro, sterling, Aussie, Kiwi rallying, right? It's a pretty easy profile to follow. Now, if you're looking at cryptos, they aren't following the game at this stage, right? They are under so much pressure that we might get just a bit of a snowball of liquidation as that goes along. Right, so what do we do here? Now, one thing that you have to identify when you are coming into these events is what are you going to trade, right? Interest rates, they are going to impact equity markets, right? So you get your equities, US equities to start with. They will impact European equities, Asian equities, Australasian equities, right? It'll come from the decision. What happens on the US equities will filter through to those equity markets. So you really have to look at that and go, well, hell, so the equity markets might be the best trading instrument because it's a pure move, right? What you've got is with a lot of the major currency pairs, and I'm not saying the dollar's not going to go for a run up or down depending on what happens, but you do get a bit of convoluted action because you've got two sides of the equation there where you've got the US equity markets, they're just reacting to the interest rate move. So they just go one way, up or down, right? With the currencies, you've got the euro against the dollar. So euro's weak, dollar's strong, and you've got that balance. So Aussie, Kiwi, all the other central banks are coming online. So it can get a little bit trickier. But in saying that, the currencies are performing very well with the outcome. So it's like you're trying to sort of pick, what am I supposed to trade here? Is it cryptos? Is it equity markets? Is it majors, commodities? You got to get a feel for it. So the best thing to do is come in, have a look at see what the US equity futures are doing. If they're up and the dollar's down and the euro, sterling, Aussie, Kiwi are up, you're like, okay, I've got a feel for what's going on. Now, what outcome would make that continue? This is what you got to think about. So once again, if it was plus 0.5, right, that's below expectations. Now, the forecast over the last couple of days is for plus 0.75. That's what you got to be focusing on, right? That's the target. So if it's 0.75 or less, right, I think the equity markets will rally, depending on the statement and conference, of course, press conference. And that's where we're getting to next. But if they go by 1%, right, well, you're going to have another 5% down day here on the US equity markets. I can tell you what, the Fed do not want to put panic in the equity markets. They want the equity markets to go down sort of nice and easy. If they raise by 1%, this is why I don't think they will go 1%. It's alarm bells. Everything will get liquidated. They'll be down 5%, and we'll be down 50% for the year pretty quickly. So I don't think they're going to do it. 0.75, come out with, you know what, we have to see how things play out and all this sort of stuff. And we'll go from here. So to me, we've already seen the big dollar move. I think the most likely outcome is 0.75. We'll see what happens, and the dollar drifts lower, right? Pretty quickly. Of course, the press conference is the key, the last part of the equation, which you need to get up the curve on, right? So if you're looking at, this is the Fed site, right? You should have this page up on your saved bookmark files. Well, you got a lot of stuff here. I'll show you the monetary policy in a second, but the press conference, if you aren't sure what happened last time, get in here and have a look and just press play, right? Jerome Powell goes through his whole spiel here.
See everyone in person for the first time in a couple of years.
First time in a couple of years, and that's right. It's going to be pretty busy from here.
Before I go into the details of
so he goes into detail there for about 7 minutes, and then it's questions, and that's where the activity is, right? So that's what you've got to be looking for. So as a good warm up, if you're sitting there and you've got time on your hands, have a look at that. As I said, about 7 minutes in, his speech finishes, and then the rest of the time is questions. And they will be digging deep about employment. They'll be digging deep about inflation. They'll be digging deep about how high do you think interest rates are going to go? And he'll avoid the nasty questions, but he'll answer some of the other ones. So that's something you have to get accustomed to if you want to become one of those elite traders. Now, what are we supposed to expect? Now, they will post here recent developments, right, after the announcement, the details of what's going on. But what you can do is go straight in here to meetings and calendars, right on the time it's supposed to be released. It will be released here. You'll have the statement, right? And the press conference, obviously, afterwards. Now, one thing that you might want to do is get yourself up the curve. Check out what happened last time. Go into the statement and have a look. Now, instead of like going through this, because this is what he reads out at the press conference anyway, usually, I would go down here to the very bottom and see what the hell is the conclusion. They voted unanimously to approve a 0.5 percentage point increase in the primary credit rate. Approve request to establish rate, blah, 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 blah. Yep, that's great. Okay. Directs the desk to, maintain the federal funds rate, 0.75 to 1%. This is the key bits and pieces, right? And have a look up here. If it's unanimous, right, means they're very confident with what they're doing. Usually they aren't, but if they're raising by 0.75 and it's unanimous, well, that's a sort of like a hawkish tone. If it's 0.75 and it's not a unanimous vote, that means some of them are like, don't do it, which means next time it'll be harder to probably get through. So there's all these little bits and pieces here that you need to have a look, right? So go back in there, have a look at the previous statement, but this is the page here, monetary policy, meeting calendars and information. Have a look at the press conference, try and get a feel for what's going on. And in the, what they were talking about, he sort of did make some comments about, they never considered 0.75% like last time, right? Inflation's high now, so it's obviously on the table, but that's something you have to consider. So that's where we are. Get onto the page. Do not be afraid of the central bank pages. It's better to read it than not. When you come back to actually trading this stuff, well, let me just come back to the charts here briefly. It's an interesting one, right? Because we've got so many weird things. So depending, once again, on what you're trading, are you trading currencies, commodities, right? Equity markets are going to be very lively, right? And don't think if they come out and do one thing at the start of the release, so they go 0.75 and the statement looks a bit dovish, like neutral, don't think that can't change in the press conference. It can, right? You've got to be active. So get all your positions on. If it looks well, if it looks great, don't just sort of sit there and let it go, because in the press conference, that could turn around. What happens quite often is if the market misinterprets what they've done in the statement, they will look at the markets and go, oh my God, I think we're going to go 1% again. They will come out in the press conference and correct that and go, we are not going 1% next time, and really get the markets correcting themselves, right? As I said, the central banks are not about creating volatility or panic. It's actually the opposite to what they're trying to do. They're trying to manage the economy in the least amount of volatility that they can. So now pick your poison. Once again, you come back and have a look here. It's pretty tough. Looking at the major currency pairs, right? They're down here in the middle of nowhere, right? You got some levels here on Kiwi, Aussie, down here. Dollar yen, it's just going up. Dollar Swiss seems like it's joined the boat there with the dollar run. Like the Swiss and yen both neutral, so it's just a dollar reaction. You can see the dollar index there. They're like a mirror image. Now, the only unfortunate thing is they're sort of in the middle of nowhere, right? So is euro, so is sterling, right? The Aussie and Kiwi a little bit more shape. What you're trying to find by looking across all the markets is trying to find an instrument that is going to be impacted, right? We obviously know the US equities are going to be impacted. Find something that has some sort of tangible technical aspect to it. If you can, it makes the trading opportunity easier. Don't forget, like the Nikkei here, there's going to be massive overshoots. So in your plan, right, factor in bigger stop loss, smaller position, because what you're going to see is bigger moves, right, across the board. Now, like these two moves here on the S&P and NASDAQ, right, you've got these massive moves. If they come out and say, well, that's, we've done enough, this could be corrected somewhat. And you are going to get a massive move. So don't worry about trading a small position. This is where your capital management plan really comes into play. You've got to think about it. If anything, the whole event is so uncertain and volatile. You get the release, the interest rate change, the statement, the press conference. There's all these things going on. It's like fireworks. You can't really see what's going on. So don't get yourself caught up. If you are going to trade straight away, good luck, right? Liquidity is going to be scarce. Volatility, huge moves one way or the other, right? I'd say at this stage, like the two ones where you can be sure as hell what's going to happen. If they went by 1%, the dollar goes through the roof, equity's crushed, right? Or they only go by 0.5%. The dollar falls, equities rally, right? That's at 0.75%. I think that's what's expected, right? So it really comes down to the statement. That's almost too convoluted to work out very quickly. So to me, 1% buy dollars, sell equities, 0.5% sell dollars, buy equities. So that's where we are. And it's, what, the equity markets don't really have any sort of major gorgeous levels there either. So I can't really sort of say, well, I know what's going to move, but can you tangibly trade it? I think if anything, reduce your risk, get in where you can. If you're confident with the move. As I said, and also just on that too, with the whole moves themselves, it really comes down to like a couple of minutes afterwards. You'll see on your news channels, right? If you don't have a professional news and analysis package here, you are just guessing. By the way, you won't even know what's going on. But this will be full of FOMC. Jerome Powell says this, the targets, their inflation targets, all this stuff, what they're going to do. So you can have a look. So it takes about a good minute or two for that to come out. Once you've read it all, you'll be in a good place to understand what's going on next. Now, of course, you might miss the move. Who cares? But what you're trying to avoid is losing money when you probably got it right? Going long dollars. Okay, they've raised by 0.7, they're hawkish. But you've been flushed out because it's just the volatility, right? I tell you what, there's nothing worse than that. It's like a double loss because you're like, hang on, it's higher. I was long. I've been stopped out. Right? It sucks, right? Big events, they blow. So make sure, if you're not sure, by the time the press conference comes out, you'll know exactly what's going on. The currencies and instruments may be miles away, but that's exactly what is going on, right? Let me just come back to this tech page. Right, so just having a look here. This is one thing that I would be encouraging you to do, right? Have a look across the board here at a lot of the instruments. Like what you'll find is some diamonds in the rough. Check out this daily trend line support level here on the Aussie, right there. Okay. This is the sort of stuff that makes me happy, right? Because then I can come back in and go, wow, the Aussie looks set at a big level. Then you come back through, and what I'm doing here is looking at the, equity indices, metals, commodities, currencies on 4 major time frames, so I can get a good idea if there's any sort of key levels. See, the S&P is already broken down, right? I'd say so, and if they only move by 0.75 and a half and the equities rally, it's a sell on rallies because this isn't over, right? They've got a year or more of raising interest rates before this is over. So that may be something there you could look at. And you're like, okay, well, what about the NASDAQ? What about the Dow Jones? What about all the other stuff, right? And you come back in here and you can try and sort of piece together some sort of levels. And you can see here, well, if I actually just blow this up, you're going to find situations like this where you don't really have anything. And if I wanted to find out where this was going, right, as I was saying, there's a lot of pain to come. The support level here on the NASDAQ is down around 8,400, right? That's where she's going. How do you get in? Small position, big stop loss. It's all about timing, right? Even if they, as I said, they go by 0.5%, they're a little bit sort of less aggressive. We might see a spike in the equity markets, but everything's going to be a sell on rallies here. So I would get into your charts and timeframes, look across the board. Don't be afraid to just dabble, have a look. Oil, gold, the currencies, get in there, see where those daily trend lines are and see if there's an opportunity for you to get into a trade here without too much risk, right? I'm just having a look here. Gold, well, a fair bit lower, just under 1,800, and it's going to tank. So that's something interesting for me to have a look at. Dollar yen. Well, if I look at all the daily, all the majors on a daily perspective, just looking at the bull bear line, the obviously euro, sterling broken, Aussie down, Kiwi down, and the dollar pair's all above. So the dollar's going up, the others are going down. We know that. There's no surprise there. Sterling. Anyway, you get the idea. The idea is have a look on longer time frames, because now instead of looking at where these things are going short term, it's about time we start looking at this stuff. Where's that thing going? Start looking at those longer term levels, because that's what it's breaking now, right? This is like a much bigger trend situation. All right, so that's where we are, guys. And just having a look at those cryptos to finish up. I mean, these are good trading instruments, right? If you were holding physical cryptos, you'd be feeling a little bit sick in the belly. But as a trader, trading on margin, we love this stuff, right? This is what we've been gagging for this for so long, right? For years. Bring back the central banks. It's going to be crazy. As what's that? Jamie Dimon, head of JP Morgan, financial hurricane coming. We love it, right? I mean, this is what a lot of people won't love if you're holding physical. Bitcoin Cash down 70% for the year. Litecoin down 70%. Bitcoin down 53 or 54%. It's crazy. All right, guys. So that's pretty much it. There's not much more you can do except prepare yourself for a bit of carnage, a lot of volatility. And the main thing is when you are, sorry, let me just come back to this one. Right, understand what is expected, right? 0.75% is the expected outcome. And I know on a lot of sites, it still says 0.5%. They just haven't updated it from last week. That's the forecast. Above, dollar goes up, below goes down. Or if it comes out at 0.75, it's all about the statement. And if it's all about that, then it's all going to be about the press conference afterwards as well. 3 major components. Get yourself ahead of the curve, reduce your trade size, increase your risk parameters, have a crack if you're confident. If not, stay out of it, right? Other thing, just before the announcement, make sure you have an idea of what the equity futures are doing and what the currencies are doing. Because if the market's like this, got this profile, it makes me confident that the markets are actually working quite normally, all we're going to get is volatility on top. Once the dust settles and we work out what the rate change was, what the statement is, that's when the market will start chiming. That'll take about 1 or 2 minutes, right? Then you can actively get involved. And don't be afraid, as I said, if like equity markets rally aggressively afterwards, right? They are a sell and rally. The dollar is not going down here just yet, but we may see a correction if it is 0.75 and a neutral sort of tone. I think they're still going to be hawkish, but a plus 0.5, that's going to be dollar weakness, right? Primarily because 0.75 is factored in. So everyone who's bought it, like the whole market, will have to start selling dollars because they got it wrong. All right. They'll sell dollars quickly and then they'll buy them back after about 150 point move. All right. So plenty in there. Good luck. Any questions? Let me know. All right, guys. Have a good one. Cheerio.